And we're back. Things have been absolutely crazy. So let's dive in here. Equities have rallied significantly off their lows. Crypto's actually holding pretty steady here as well. Meanwhile, housing continues its relentless decline. The dollar is finally showing notable signs of weakness. And the big question now is this time different? Is it possible that we have a soft landing after literally every macroeconomic indicator has signaled flashing red signs that a recession, deep recession, or depression is on the horizon? And is it time for bears to throw caution to the wind and start aggressively investing into this uptrend? Is this the bottom, or is this just another bear market rally in the world's most unprecedented downturn in economic conditions in history? Well, let's dive in and figure it out. Now, first, a little bit of a rant. If you guys are excited for a little rant, go ahead and smash that like button. I want to say a few things. This whole SBF drama, the news headlines, the media circus around crypto right now, it's a big distraction. In the end, investing, personal growth, business, focusing on news doesn't usually help you with that. Usually the news is already baked into price or it's not super actionable. It's very rare that news helps you really invest. Now, all of the biggest news stories in history, especially the negative ones, China banning Bitcoin, China banning Bitcoin, China banning Bitcoin. Anyway, the point is there's been a lot of negative news, Mt. Gox, China ban, now we have FTX collapse. All of these things usually, even though they can signal more downside in the near term, none of them have actually killed crypto. In fact, there's a site dedicated to how many times crypto/Bitcoin has died officially or has been deemed dead by the press. These are usually good times to accumulate crypto. I'm not saying that right now is the time to buy everything, but I'm saying that we're starting to enter into one of those value zones where prices could become really, really juicy when you look out 5 years out, 10 years out. Now's the time to plan long-term because you can make buys that aren't just going to give you a gain next week, next month, whatever. You can make buys that could give you gains over the next 5, 10 years because those prices, they won't really be revisited again. That's what we're looking to do. Again, understanding where we are in the macro conditions, that's really key. Now, second, I hope you all survived Thanksgiving. And just a little word on talking to family and friends about crypto. I don't think I've ever brought this topic up, but personally, I don't talk to family and friends about crypto in my civilian life. I don't ever really mention it because what am I really going to do? Explain in a casual face-to-face conversation how to deal with this? No, if you end up getting someone that you know into crypto, they're just going to lean on you for everything. Every price movement is going to be your fault and they're going to constantly badger you with questions. The best way to get people you know into crypto is not to do it at all. If they want to go down this journey, then they need to put in the work. Because as you know, at this point, crypto is not an on-off switch of money. You need to learn some skills in order to have success here. And you also need some market experience in order to know when to buy, when to sell. That's it for that rant. Obviously, people who come actively searching out videos on YouTube, well, that's a different audience. They've self-selected as interested in developing this skill set. Right now, what everyone needs to be doing is focusing on themselves. Stop getting distracted in the news. Start focusing on yourself, your business, how you're going to make money, how you're going to create pools of capital that you can invest in distressed assets during this insane bear market, down market. Now, we could be towards the bottom of this market. We could be just entering in to the next phase where things really drop aggressively. Either way, if you're planning to buy out and spread out your bets over the next year or two, I think you'll be buying into incredible value zones. Now, personally, I think something's going to break in the mainstream economy, which will send everything much lower, which is why I haven't unloaded my bags yet, because I'm waiting for something to really break. Nothing's really broken yet in the mainstream economy. So anyway, that was the rant. Ignore the news, focus on yourself. Don't worry about getting family and friends or anyone you know in the future into crypto. If you want to talk about crypto and you're so obsessed with it, go on Twitter Spaces, like the one I host at 9 a.m. Monday, Wednesday. I'll probably do more days as well. Start your own Twitter Spaces. Just join the community. There's a ton of people to talk to. That's why I started a YouTube channel, was because I'd literally worn out the ears of everyone I knew and no one cared. So I just went and talked with people who gave a shit about this industry. And those people are there on Twitter, they're there on YouTube, they're on Telegram, they're on Discord. You don't need to press it into your personal relationships. Anyway, back to the video. Today, we're going to do a general market update video, look at everything that's going on mainstream markets and crypto, and get a sense of if the bottom's in and if we can expect more of a relief rally here, or if we can even expect a pivot in this massive, massive bear market. So part one here, let's talk about inflation. The last CPI release was clearly a step in the right direction. This is the first time we saw some meaningful inflation progress. However, let's be real, inflation is still sky high. And if we look to the 70s, there's a clear track record of this high of inflation being hard to just completely send all the way down in one fell swoop. Meanwhile, the markets have looked extremely bullish, with the S&P 500 back above a 4 handle here, over 4,000 for the first time in a while. Bitcoin is only up about 10%, and we can probably credit the FTX drama with being what's holding down the industry right now. Lots of contagion, fears of contagion, and overall fear around crypto as an industry is leading to less of a pump. But with so much bad news, it's almost a question as to why we didn't dump more. Again, I will say, and I'm not calling an end to the bear market here, but it's a good sign when bad news doesn't dump the market further in a bear market. It means that there's not as many sellers left to just aggressively dump. One of the things to pay attention to here is the break in the dollar, DXY, which is bringing relief right now to all risk assets. Is it sustainable? Well, right now it's hard to tell. What we do know is that the yield in cash is falling and that some of the biggest and most successful investors in the world, like Ray Dalio and his infamous Bridgewater hedge fund, has had an absolutely dreadful Q4. They were caught completely off guard by this change. So just know, if you're confused by these markets, the absolute best, most sophisticated, and most successful investors in history are getting caught off sides left and right in these market conditions. But let's focus on what I think is the main dish right now, which is the absolute biggest glaring red light flashing issue within the economy that I see, and that's housing. Housing is looking bad, real bad, like Michael Jackson bad. Technically, that was, I think, good. The point is that housing is going through one of the biggest price corrections in history. And even though this is super justified considering housing was like all the way up here when the rest of the market was crashing dramatically, it's still the biggest and most impactful market when it does crash. And the most important headline here is Blackstone. Blackstone is one of the biggest property buyers in the entire world, and they just halted their withdrawals, limiting the amount that investors can pull out in these market conditions. People say all the time, oh, with housing, it won't collapse because in the end, people will just buy the dip, or everyone in the housing market this time has a much higher credit rating. And I said, yeah, but what about the institutional buyers? See, institutional buyers are rocket fuel on the upside, but once they hit their liquidation points, once they become forced sellers, and we can look at Three Arrows Capital, Luna Foundation Guard, you can now look at Celsius, and now you can look finally at FTX and Alameda. Once they reach a point where they now need to grab and make liquidity to pay off their debts or to pay off their creditors or investors, now things get dicey in a market, especially like housing, which has less and less buyers by the day. How do you liquidate hundreds, thousands, tens of thousands of properties if it needs to happen? The answer is you can't. And if they need to then put that many properties on the market, what's going to happen? To use an NFT term, they're nuking the floor. That's something that I think is happening on the horizon here. And Blackstone limiting withdrawals is one of the biggest headlines in the entire financial world right now. You need to understand that. And that's why I'm approaching whatever we're seeing in the markets right now with a dose of caution. Because if housing starts aggressively ripping lower, you better believe it'll have a huge effect on what we call the wealth effect, where the majority of American families, or really families around the world, measure their wealth based on the value of their property. If their property drops in value, their perception of their own wealth drops, their spending drops, and that affects the stock market. Some experts are predicting about a 25% drop in housing prices, and I personally think that could be modest. At least here in LA, what I see is housing is in this ridiculous bubble where the prices of housing is so elevated compared to where it was just pre-pandemic, just 2-3 years ago. It's astronomically higher. To me, it doesn't make sense, and it's bound to correct. Remember, pre-pandemic was after 10 straight years of bull run in the housing market. It can't go on forever, and I don't think 2020 prices are necessarily the bottom. It would make sense to me that it would correct even further. So is the bottom in, and can we expect lower and lower inflation and a Fed pivot? Well, just like when we saw a lower print earlier this year in July and the market went euphoric, and then we got ugly inflation prints after, the answer is we don't know yet. When you want to see lower inflation, you want to see it over a duration of months, because any individual month is not necessarily the indicator. What we need to know is that inflation is sustainably coming down, and that allows the Fed to then start being nicer to markets and potentially even eventually lowering rates and injecting more liquidity. For right now, what we don't know is whether or not this inflation lowering thing is a trend or just a single data point. And there are several things that factor into this. Now remember, if we transfer from an inflationary bear market to a deflationary bear market, you could see the dollar drop along with risk assets, which is super punishing. And typically in those environments, things like gold and what we hope is things like Bitcoin would do well in that environment. So all eyes are on the next CPI print. This is going to be the second piece of data that'll help us know whether we're on the right path, and it could start adding some real fire to the bulls if it comes in way less than expected. Will we get an absolutely terrible print after having a quote good one? We will see. Again, front running this stuff to me has very, very little value unless you're an ultimate degen and just really want that risk. So let's look at the three things that I think are really critical in assessing this pivot, and you want all three of these things to be very clear and evident before going ahead and declaring, okay, the pivot's in and the market is shifting. First, Fed communication. Like I said, they're going to make this real clear. When it's time to pivot, the Fed's going to break out the big guns and start making it clear what their plans are. Until they start communicating very clearly how they're going to handle the next phase, I'd say let's not get carried away in the hopium. 2, recession risk. We need to know, are we going to go into a recession? Is this time somehow miraculously different? When almost every single indicator that predicts a recession has flashed red, are we going to somehow miraculously go in a different direction? Just like with the COVID crash and we got this up-only market after, is the Fed going to somehow walk the tightrope and avoid a recession? Personally, my guess is no, and that's how I've been stacking my chips and preparing to invest when we really get into the meat of the recession. But again, it's day by day. We want to track this stuff. Now, we must understand, we had a strong jobs report the other day and stocks went tumbling. Think about that. Strong jobs, stocks went tumbling. That means the bulls are 100% hitching their wagon to the idea that the Fed is going to pivot and inject money into the market when things get really bad. Remember my video, keep it simple, invest when they break something? That's how every single person and every single bull is trading this market. So they're hoping that things are really bad so that the Fed will pivot and that the recession will be averted and that the money printer will just come on and dump money into their bags. Again, everybody is riding the Fed pivot hope. So what happens if the Fed doesn't pivot? Because they can't pivot because of inflation. That brings us to number 3, which is of course inflation. Watching the inflation prints and the CPI prints month over month is the absolute best possible way to understand if we're actually going to be in a place where the Fed can pivot. As Carlo Cassio says, global equities hardly down 20% year to date. Earnings recession didn't even start yet. The final bottom in equities is far below. In the meantime, this off the lows bounce is still developing. Don't miss the exit. What he's saying here is that these bear market rallies can be brutal, kind of like what Wifey's been saying this entire year, is that these bear market rallies are crazy. They're technical, they happen. And the more aggressive they are, typically happens in the more brutal bear markets, meaning the more aggressively we rally in these bear market rallies, the longer the bear market's going to be and the more brutal the ultimate end to the bear market will be. That means if you're going to play these rallies, don't be scared to hit the sell button once you've earned some profits, because these can take the elevator down like that. Now, people have made these correlations, but you need to look at the 70s, the last time we had this crazy amount of inflation. And in 1973, the Fed pivoted after SPX dropped 20%. SPX briefly rallied, and then the real bear market started. So you had a multi-year time here where the Fed increased rates, pivoted, the market came back, and then we got the real brunt of it because inflation went crazy and the real bear market started. As you can see, we had this initial bear market, then the rally up, then a real crash. This is what we want to be wary of, is that if we are in a 70s-like regime where inflation is going to be quite sticky, then this could be what we're looking forward to, which is why we're not putting all of our eggs in a single basket. Not at all. Inflation is the boogeyman. Inflation is the monster under your bed. Inflation is the thing we're fighting here. So just make no mistake, until we really have some substantial progress on inflation, not a beginning of a trend, but really we can see ourselves getting back to a neutral inflation of what the Fed says they want, close to 2%, maybe in reality more like 3%. We're not really past inflation, and trying to front run this too much has led to incredible amounts of pain in the past, period. If you're going to look at the data says this takes a long time to fix. When inflation passes 8%, it historically takes a decade to return to 4% or lower, recessions and all, meaning that inflation doesn't just magically go away. It's a very long healing process. So thinking that inflation's just going to magically disappear and that you're going to get this up-only bull market again, that is hopium, and it's not supported by the data, period. When we defeat inflation, we can go back to easy money environments and allow for the expansion of the economy. But just know it might be a very long time, if ever, before we get a climate that exactly resembles the 2010s, which were this pretty much free money environment in all markets. And Mr. Bob EllioTrades over here has said here that we are seeing an uptick in the expected inflation rate for November that we'll get to see here in December. As you can see, we got this big move down here, but now we're ticking back up again. If we start ticking back up aggressively, just know there's absolutely no way that the Fed can or will pivot in their approach to the markets. So let's leave this with a nice thought from Benjamin Cowan, which is bear markets can be difficult not only because of the price depreciation, but because of their longevity. Is often a good reminder to not forget forget to go live your life while the markets digest everything. That brings me to the most important thing here. These bear markets will go on as long as they go on. You can't control that. I can't control that. What we can control is how we react and what we do in our personal lives to put ourselves in a place of advantage, to work hard, build our own careers, our own skill sets, and get ahead. As you know, these bear markets are how most people have made the most dramatic amounts of wealth. Understand that this is all part of capitalism, the booms and the busts, and the people who take advantage of the busts are the ones who are kings of the next bull. It's on each of us to focus on our own lanes, to pursue the things that we're passionate about and that we think we can do better than anyone. Because as my guest on a few episodes ago, Alex Hormozy, explained, business is whatever you want it to be. As long as you find something you're excited about, you can turn it into a business. We live in a brave new internet age where anything that you like or that you find a passion in, for example, I found a passion in yelling about cryptocurrency. It became a career. And understand that that transition is super, super important. Anyone can make it. So ignore all these headlines. Ignore the Sam stuff. Ignore the crypto bear market macro recession porn because it's not helping you advance in your life. Even though I'm going to continue to report on it here because my audience absolutely loves and really depends on these updates, I'm going to be focusing as much as I can on helping people unplug from some of this media circus BS and focus on their own lives, because the people who do that, who grind in their own lane, whether it's here on Web3 or wherever they want to do it, they're going to be way out ahead when the markets do stabilize and eventually the storm passes, as it has each and every time before in history. Remember, it always seems like something brand new and something impossible to navigate, but each and every time markets digest the bad news and move forward. Each and every time in crypto, markets have digested the bad news and moved forward. Prices will vary, but the people who keep working and keep pushing are the ones who make it. As always, if you enjoyed this video, smash that like button. We're back, baby. We're going to be making all kinds of content, and I'm excited to take an even new direction with this content as I have been over the last few months. I'm going to continue to push that lane. If you guys want to see more of me, I'm doing a live show on Twitter, 9 a.m. Pacific time, Monday and Wednesday to start, but I'll probably be going live on Twitter a lot. I also encourage you, if you haven't seen the Superverse relaunch, which is the relaunch of Superfarm, please go watch the last video on the channel. It's something that the foundation and my team has been working towards for what feels like forever, and contained in it is a ton of updates on that project. Remember, the bear is about putting out products, and there is a big product release tomorrow happening called Gigamart. Please watch that video. We also said we'd be giving out 1 Ethereum on that video, so make sure you comment on that video. We'll be giving out 1 ETH on the next episode, so make sure you get a chance to go comment. If you do that, you can win 1 Ethereum, and please check out everything within that video. There's been an incredible amount of hard work that's gone in to what you're seeing there. As always, I'm EllioTrades. If you enjoyed this, smash that like button, and I'll see you very soon on the next episode.